Yeah, hello everyone. So thanks for joining us tonight. We're here to present you the result of our extensive work, our first inaugural art, tech, and NFT startups report created by Fuelarts. Uh, Today I have the co-host Katya Cohen. Hello, Katya.
Hey guys, so good to be here. Dennis, how are you doing?
I'm good, thank you. Thanks for asking. So Katya is an investment analyst and investment advisor, investment partner of Fuelarts, also the co-founder of Amadeo Global Venture Capital firm from New York. So the report is already available for direct download through our website, fuelarts.com. But now we're here to describe it, to uncover some interesting features, some interesting data, to discuss the key numbers we came up with, better say the ArtTech market has come up with within the last year, and in fact in last 30 years of ArtTech startups existence. So this is the first full report on the art and technology market, focused on the life of ArtTech and NFT startups, including their geographical distribution, investment attractiveness, key problems, and what is more important, the solutions. So the mission of the report is to make the market more clear for startups and transparent for investors, as well as the mission of Fuelarts. So as a foreword, I should say that our work won't be possible without the significant contribution of our colleagues from the ArtTech ecosystem. First of all, the Deloitte Art and Finance team, led by Adriano Piccinatti di Torcello, and ArtTech and its founder Anders Pettersson. Back in 2019, the Deloitte Art and Finance report published the results of the first study on the ArtTech startup market conducted by Roxana Zarnegar with my contribution as well. So let's tell more about the methodology. So in this report, we focused on public data taken from Crunchbase and PitchBook sources. We are grateful to these public resources, which for many years have collected and continue to classify legal, financial, and marketing information on startups in various fields. However, the Crunchbase classification of ArtTech startups has been refined by us while preparing this current Fuelarts report. For instance, we adopted classification of art startups introduced by Crunchbase because on the Crunchbase, art startups include not only technology companies in the field of art, but also young companies that do not use technology in their work except their website, email, or data storage services. So these companies were excluded by us from the ArtTech list, as well as we excluded music, film, fashion, and sports companies listed by Crunchbase as art startups. While writing the report, we conducted a global survey of founders of ArtTech startups and art market representatives, top art analysts, and other personalities responsible for the strategy, the global strategy, the people who work for big art companies. So while doing this survey, we also wanted to determine the degree of interest of young companies in the contribution of their personal experience for the needs of the ArtTech ecosystem. And To finish with the methodology, I should admit that the report also includes 5 interviews with the art market leaders, 1 ArtTech investor, financial analyst, an NFT collector, an NFT artist, and a startup, digital art startup. So, of course, when we start a report, we decided not only to focus on to focus on the numbers of 2021, but also we had to describe in our first report the ecosystem of the startups. So in our introduction part, we revealed what to consider a startup and what just a bare idea. So here on this slide, you can see the ecosystem infographic representing the entrepreneur's path from idea to sustainable business through the startup period, acquisitions, and other exit strategies. Katya, by the way, what's your definition of the startup? I mean, what can be considered a startup and what can be considered a bare idea?
Oh, that's a good question. I think to me the startup is well, everything from 0 to 1. So even an idea, in a sense, is already the beginning of the startup. I feel like where the confusion happens is where everyone considers still a startup a growth stage company from 1 to further, because at this stage it's somewhat startup-ish, but it's already business and should be treated as a business with counting all the numbers and solid foundations of business aspects. That's the way I see it, with all my experience in investing in multiple startups.
By the way, being a part of one particular accelerator, Katya has educated more than 140 startups, and now she also educates as one of the key mentors at Fuelarts. So as you can see, a brief history of ArtTech, on our screen. So in this part, we also provided a comprehensive analysis of the periodization of ArtTech startups from the late 80s, even before the term startup appeared on the market, and to the present day. And I'm grateful to our friend, financial analyst Diego Belkevich, who gave the idea to name the periods of ArtTech similar to prehistoric world, like primordial soup, Cambrian period, Jurassic period, the Great Shift, etc. We'll be happy if the ArtTech society and the market accepts this periodization and starts using it beyond. So for this report, we divided the ArtTech world into 2 parts. Tech startups dealing with physical art objects, and startups that work in the field of digital art, including NFTs. And this table clearly shows in a timeline how young companies from the physical and digital world were financed. Because today we see and hear a lot of speculation about the expansion of NFTs and NFT startups, and for someone it may seem that physical startups are a thing of the past. But as we can see here, the cumulative investment in this sector over the past 30 years has exceeded the digital segment. Sure, starting from 2015, more exactly 2016, and the rise of blockchain, the investments in blockchain startups in digital art have significantly rushed forward, but this trend has been balanced by the pandemic and the investments in technologies that work with physical art objects, which in fact saved the art market during the pandemic. Yes, our first case study with Diego Belkevich, financial analyst and a partner, co-founder of Amadeo Global. So let's jump to the first part of the report. In the first part, we revealed the combined art tech market, both classic physical startups and digital ones, and key financial indicators like the amount of funding over the past 30 years and separately in 2021. So We describe the portraits of ArtTech investors, the distribution of startups by development stage, business niche segmentation, and geographic location. Also, we made a stress on female founders. So the key data in our report, we put together we put ArtTech startups in 4 categories, as the classic venture capital recognizes the value chain: production, trade, management, and analytics, because every asset needs to be produced, traded, then managed between the 2 transactions, and then to be analyzed to send the market signals to the owners about the best time when to purchase or to sell. So as of December 2021, we identified 702 active ArtTech startups on the market. When we say active, it means a combination of, the company should exist, it should work in some terms, and the other meaning of active means that it should be transparent in mass media. So it should be transparent to Crunchbase or PitchBook, or to both of them. So as we can see, 319 represent traditional, non-digital ArtTech market, and 383 represent digital and NFT ArtTech market. So yeah, the second one is better. By the way, Katya, if you wanted to, I know that you have already invested into several ArtTech startups, but which one do you prefer? I mean, from the classic art and tech, or from digital and NFT?
Which one I invested, or which one I prefer?
Let's say that would be your first investment.
Well, my first investment was in art fund. That makes more sense.
Yeah, I know, but so let's say
it makes more sense because
you're going to choose the first object of investment. So which one will you choose? The startup dealing with traditional art, or the digital art and NFT?
I mean, I would choose the second one, but it's my personal. Anyway, I would choose the diversified risk in a sense, but it depends what hat would I wear, like as an investor, as an angel, or like a professional investor where I invest from the fund. That needs to be separated.
Yeah, and we'll have a page where you can contribute to. Yeah. We'll have the page.
I have Denis, a bunch of questions for you regarding the report, but I would love you to, maybe walk through the rest, and then we can open to Q&A. Because I'm itchy to ask those questions.
Good. So the key data, starting from their launch until the end of 2021, those 702 ArtTech startups received 3.6 billion in total funding. Of course, the trade received more than the rest, because it's all about trade, it's all about marketplaces. 2.2 billion, which is 60%. Then goes production, then management, and then analytics. Yes, the next page, please. So a deeper approach allowed us to divide production in 3 separate segments: research and development. I mean, the studios, content creation, search and marketing, online education, social networks connected with art. Then visualization, which means AR, VR, MR, 3D modeling, creating virtual spaces, and gamification, online art games, and blockchain art games. But when it comes to investment, we can see that, sorry, may I ask you to move back and once more back? Yes, thank you. So we see that according to the quantity, the biggest is research and development. So 357 startups in general, in terms of the quantity of the startups, from which 54% physical and 46% digital. But the next slide, when it comes to investment, we see that the most investment was occupied by trade, from which is nearly the same numbers, 53% physical and 47% digital startups. So trade occupied 2.2 billion, or 60.3% of the whole market. So, and now we can see the geographical spread of all our tech startups. We see that North America, namely the US, Canada, and Mexico, leads with 224 startups in terms of the quantity of startups. But also it leads in terms of finance. So 1.9 billion, or 51% of the whole ArtTech ecosystem were invested in the North America incorporated startups, namely mostly in the US startups. If we speak about the country, US from this amount has 199 startups, which is 39% of the total funding from all the geographic spread. The next slide, please. So it was interesting for us to analyze the to compare the founding date, the date when the startup was launched, with the actual money received the same year. So in that sense, we can see 4 successful periods: 2007, 2014, 2017, 2021. So each of those successful periods of founding of ArtTech startups is a reaction either to the parallel growth of the art market itself after the economic recession, like it was in 2006-7, in 2013-14, or the introduction of fundamentally new technologies that the art market later tried to adopt in 2016-17 and 2021. And the next page shows the last funding. So the year when a certain startup or a group of startups received its last funding. I should put a stress that even those startups which received their last funding in 2000, in the beginning of 2000s, 2001 in particular, they are still active on the market. But compared to the last to the previous page, we can see that ArtTech startups that were launched simultaneously with the growth of the classical art market, they moved forward on the investment ladder much more than the others. But the startups whose emergence was connected with the growth of technology market, like crypto or blockchain, and which offer the art market solutions without being focused on problems, got their last money the year after they were founded. So that shows to us that we should focus on problems of the market, but not the solutions. On this page, we have investment portraits, and I would love if Katya made a comment on this page. Especially, we see that VC, venture capital investors, they contributed the most to the ArtTech startups, which equals, I mean, their financial contribution in terms of volume is 43.8, actually 44%. So why are the ArtTech startups so attractive to VCs?
Yeah, good question. I think it's a good, VCs are the sharks in a sense that follow certain trends, or the markets where they still can see the big disruption, big upsides. So as you said, and with this report, art and the physical art is the niche where there's lots of untapped potential. So as sharks sniffing the blood in the ocean, then they move in that direction before everyone else joins. So, and historically, VCs are those type of backers that uncertainty and back lots of changes, lots of disruption. So I think with this, it clearly shows the potential and lots of changes for the industry and for this vertical. What is your take on that?
Sorry?
What is your take on this?
My take on this, I mean, I agree with you entirely. That's why I was asking you.
Yeah, great.
So
I'm happy
let's
that
jump
we're
to
aligned.
Yeah, that's why we are partnering and working together. So the next slide represents the next, and the other slide represents investments by stages. We can see that the most of the startups are on the seed stage. 281 startups are now at the seed stage, so most interesting for venture capital. And right, and on this page you're currently looking at, we see the ArtTech and NFT startup stage by volume, and also by investment, presented in numbers. So on the page investment by rating, we picked up top 5 startups due to the total funding amount in each category. And we can see, and we'll get back to it a bit later, then when it comes to trade, we see that OpenSea is on the second place, but someone, due to the cumulative investment, is on the first place. So we'll get back to it a bit later and tell you the truth, who is the winner, who is the most successful art and tech startup. Also, we couldn't leave mergers and acquisitions besides our attention, because in terms, I mean, when an investor comes to a market, the first question he asks, how many successful exits does this market have? So from 2008 to 2021, we indicated 98 ArtTech startups merged or acquired by strategists. So from these 98 startups, only 17 companies, or 17%, disclosed the financial information of their exits. Among the top 15 M&A deals, there were 15 different strategists involved. 6 represented USA and 5 represented China. And one company, namely Saatchi Art, was sold twice in 2014 and 2021. First, like Saatchi Art to Leaf Group, and then as a Leaf Group to Graham Holdings for 323 million. You can imagine. So, and now I would like the startups who are listening to us, close your ears for a minute, because that information could do harm. I mean, the following information could do harm to you. Of course, you will not close your ears. You'll be all attention. So from the top 15 M&A deals, we see that 4 of top 10 acquired ArtTech startups have mixed business models that unite more than one segment. For instance, R&D, research and development and trade, research and development and visualization, management and trade, R&D and trade. However, we tell our startups during our acceleration, and we strongly believe that only a clear business model can attract an investor at the early stage. But later on, you can mix. Because as a startup grows, there may come a scaling of the business model, which in particular allows to be positioned more widely and thereby to be acquired. Katya, my question to you, do you agree with me that only a clear business model for an early stage startup can provide investors attention?
For sure. I think responding to this, as all of you know, like the trends with IPOs, the moment what drives right now in this period of time is a clear metrics, clear profitability. It's not just this unicorn game in a sense. Is that what you're meaning, like on the clear numbers?
Yes.
Yeah, and it's not just related to the art industry, but overall, so we see that across everything else, to be honest.
Thank you, and we're moving forward. So, as I told you, we focused on ArtTech female founders. So ArtTech startups have high number, relatively high number of female founders and co-founders. 108 of 702 ArtTech and NFT startups were founded or co-founded by female entrepreneurs, which is 15% of the total number. But at the same time, the cumulative funding for those 108 ArtTech female-founded startups amounts to 1.2 billion, which is 35% of the total funding received by all startups founded by all genders since their launch. So I'll repeat that again. 15% of young companies later prove themselves, gathering 35% of all investments. So women power. May these numbers from the ArtTech startups report by Fuelarts clearly show to the investors that female-founded startups are incredibly viable in the market. Katya, how could you comment on female-founded startups? Because you're also female and you have founded and invested into several startups.
Yep. I think female-founded startups is actually part of the bigger umbrella of diversity and inclusion. And that's, I don't want to say it's a trend. I think it's finally an industry acknowledgement and availability of data where we can look at the market, all the companies, and actually assess, okay, how many companies are led by female founders, how many for Afro-American, Black community, LGBT, and all that. So it's all a bigger blast of data-driven acknowledgement, to be honest. And to me, female is just a portion of that. Now, we all justify certain balance for our own reasons. I personally support female founders because I know what it takes. I do have huge bets, but it doesn't mean that I do not assess the opportunities fully, whether it's female or non-female founder. So I think there are lots of pieces into this assessment moment. Over here, it's the cumulative real data, just to look at that without any subjective perspective. And the numbers, what do the numbers show us, Denis? Like, female-founded startups is not a big thing, or they perform better. What is your take on
They perform
that?
better. The numbers show us the numbers show me that female founders and co-founders should have been more active on the ArtTech startups market, because as soon as they proceed in developing their startups, they prove their business model.
That's me.
As you've just proven the complexity of your table and laptop. So they prove their business model. And if to compare 15% and 35%, so I wish the next year we'll see 20-25% in the very early stage of female founded or co-founded startups. But
Denis, I hope we'll get there. We need to be realistic that the ecosystem is not there yet, objectively. And while some people are more open to female founders, there is still huge blast of old school prejudice towards that.
That's why we're publishing those numbers. That's why we're making it. We're putting it online and doing the report for free for all the venture capital ecosystem know about the progressive results of female founders.
Exactly. Awareness is the big step in this area.
I agree with you entirely. So we came up to to one of the most important slides. Everyone is waiting for the results of 2021. So in 2021 alone, 146 ArtTech startups received funding, including 24 startups in physical art market and 122 companies in digital market and NFT. So in terms of the total funding for those 146 ArtTech startups, that amount was 1.1 billion in 2021, which compound to 47% of the total funding received by these particular startups since their launch. So startups in the physical art market received 440 million, which is 40% from the total funding, while the startups developing the digital art market and NFT, they received 658 million, which is 60%. Among the countries with incorporation of digital startups and NFT startups that received investments in 2021, the United States leads with 41 companies. Second place takes Singapore with 8 companies. Also, ArtTech and NFT startups founded in 2021, so they just were created in 2021. They received a total funding of 307 million, which amounted to 47% of the total funding of all companies in this sector created in different years. So 2021 was the most successful year ever, not only in investments in general ArtTech startups, but also for those startups who were created the same year in 2021, mostly because of the hot NFT market. So, and the next slide shows the top startups invested in 2021. And I told you previously that we'll discover that the most successful startup in terms of investment in 2021, as well as in terms of overall total cumulative investment, was not from the digital market, but from the physical market. So in 2014, a startup from China dealing with online, it's an online marketplace for comic books. It's called Koikan Manhwa, and they received the top funding in 2021, which amounts to 240 million, and the total investment is 594 million. But why did we put this startup to art and tech ecosystem? Because starting from 2020, that online comic book marketplace started collaborating with artists and selling art-related products. So let's say welcome, which means that the art tech ecosystem welcomes everyone who wants to make a pivot or wants to make some kind of scaling. If you want to enter the market and to enter our annual report, so just do a pivot from or scale your activity from music, film, or other industry into art. It's worth
pivoting. Denis, given on this topic, pivoting from music, do you have any plans to include music and film industry in the later reports? I mean, to me, that's part of the art overall, but maybe it's a burning question from audience who's watching this.
Yeah, thank you for this question. Actually, the small answer is yes, but this answer, I should tell about the circumstances which should occur for us to accept music and the rest cultural activities into our report. First of all, we should publish at least 2 reports to gain some muscles and to to be more experienced in doing that analytics. Secondly, and more important, as we observe, as we see the market, and as we can predict, we predict and we already see the merge of different NFTs, like assets, like tokens. So nowadays, one of the most successful emerging artist NFTs, they combine music, they combine film, they combine art. Sometimes they combine some kind of texts, philosophy, and other areas of cultural activities. So that gives us an idea that in the next years, those markets could also be merged. Oh, I've not to mention fashion industry. So my projection on NFTs, that the most successful NFTs will combine several areas of human life and cultural activity. From the creative economy sector, and due to this, probably later starting from 2024, we'll start including music and film into our report. But for that, they should come closer to art. Nowadays, art is knocking into their doors. So,
and what is, given that you mentioned NFTs, what is the future of NFTs in the 10-year perspective from your view? And I'm sorry to jump into this, but given we have these few slides, I think it would be relevant to ask.
Well, I should say that, and you'll probably agree that the new era has come. And the name of this era is digital assets, because we have the audience ready to buy it. We know their habits. We know where to find them. We know why they're buying and how much money do they have in their possession. So we know the market. And in terms of NFTs, if we look back in 2016, there was a term like ICO, initial coin offering. Now we also have something similar to ICO, but they are called IDO. So with NFTs, I don't know, maybe in 2 years, the NFTs will be called NTFs or TNFs or FNTs. But the 2 key features will remain the same. will be still digital assets, because this era came to our world for a very, very long term, maybe thousands of years. And the second benchmark is that it will be around art, because art is a flag everyone wants to use. That's it. So whatever name will be invented for the next type of digital assets, it will be digital assets, and it will be around art. So when you say about the NFT market in 10-year perspective, I would change your question to the digital asset art related market. Everything will be fine with it, because we can see the whole ecosystem startups which are built around that market, and that gives us good signals that this market will be sustainable, independently how the assets exactly will be called.
Makes
because
sense.
Because each area needs changes. So let's jump to the second case study. The second case study from the founder of blockchain art startup, Christina Steinbrecher Fund. Here you can find her path, her startuppers' way to the top. Especially, it's interesting because Christina has established her ArtTech startups in the Bay Area, and why it's important. I mean, what actions should be taken into consideration while starting your startup in ArtTech in the Bay Area. It's a very interesting case study, both startups and investors. So yes, we the second part, as I told you, we distinguish classic ArtTech and digital ArtTech. So in the part number 2, we revealed the specific results from the classic ArtTech universe. We can just show the slides and stop on the page 2021 in review. So we came up to the results of 2021 regarding classic ArtTech. And what's important to mention there, we don't want to waste the time of our audience, and we want you to feel the report itself, but we'll focus on several important findings that known of physical ArtTech startups that received investment in 2021 were founded in 2021. So it was all for the newcomers to the market. It was all about digital art and NFTs. But getting back to this topic, I should say that in January, February, and March of 2022, ArtTech startups, even founded in 2022, classic ArtTech startups dealing with traditional art, they started receiving first investments again. So it's good. Regarding the case study number 3, we are happy that our guest there is Dr. Christian Nagel from Germany, a well-known VC investor, partner, and co-founder at Early Bird Ventures. He invested in different assets and ArtTech startups as well. One of his famous investment made was Auctionata, online auction house. So his experience with Auctionata, you can read it on those particular pages. 3 pages in a row. So let's jump to the part number 3. The same with part number 2, but regarding digital and NFT universe. And let's come up to the results of 2021 regarding digital and NFT startups. Page 49, yes. So digital and NFT startups founded in 2021, as we told you previously. So they received a total funding of more than 300 million, to be exact, 306 million, which amounted to 46% of total funding of all companies in this sector, created in different years, of course. Regarding the case study, we have a friend of Fuelarts here and one of the best strategists in digital art and NFT, Sylvain Levy, an art collector and the co-founder of DSL Collection, the first digitized private collection, and for sure the most known one. So in his interview, you'll find his views and opinion on the current stage of digitalization of traditional art, the difference between physical and digital, and his experience of collecting NFT art. And we're almost near. We have the part number 4, surprisingly, called "What's Next?" This is our survey. So for the purposes of our report, we made a global survey for founders of ArtTech startups, market representatives, like strategists, analysts. We compliant and sent 2 questionnaires, the startup survey for those 702 startups with a public footprint in the ecosystem, and to the less known, I mean, non-visible in the internet startups at the bootstrap stage. Their quantity was 214. So, and also we made a strategy survey. We sent it to 136 specialists. So the results of these first Fuelarts surveys can be considered satisfactory, because we received 114 responses from startups. And we should admit that the group of young companies responded more actively than their adult counterparts. This may indicate not only lower employment and higher attention to incoming messages in their mailboxes among early startups, but also the degree of their interest in participating in the market and developing the ecosystem, which itself is a positive fact. So the key findings from our survey: the most common cumulative investment amounts among ArtTech startups are from 200,000 to 500,000, one group, and from 1 million to 5 million, both at 32% of market participants. In other words, any of the startups has the cumulative investment, at least those 108 startups who replied to us, any of them has cumulative investment in between 500,000 and 1 million. And I'd like to ask Katya, why is it happening? I have my own observation, I have my own reply, but what would you say?
Maybe let's start with your observation.
Okay.
I'll add to that. Compare notes.
So, in my opinion, it happens because the investor, let's say 500,000 for an investor which invests, who invests money into art and tech startup, is a certain benchmark. After that amount, the investor considers if the startup is worth being invested in beyond. So if the startup is successful and they show that they came up with this money to some kind of benchmark, the next tech or marketing benchmark, the investor or another group of investors, they give them more, but this amount is bigger than 1 million. But if they see that those startups are not applicable for the further investment, that they did nothing with that amount, they just stop their financing. That's why we have the gap between 500,000 and 1 million.
Could be also maybe on the rounds that the startups are raising themselves, to be honest. Like the terms, as discussed, the area is still pretty fresh, so the rules to be determined. And typically if you think like on the growing chart, companies are coming in bulks, right? Early stage and transition into later. I think maybe on this, we need a little bit more data zooming out. So with further reports, you might see a big change. So that's how I approach that, to be honest.
Thank you. Yeah, that was very important to hear from you. We'll do, I mean,
more reports.
We'll dive into this rabbit hole more precisely next time, I promise. So the next findings, a majority of 72% of startups have received their funding from institutional investors. 58% of startups received their first funding within first 6 months from company's launch. But if the first investment wasn't received within first half a year, the chance of finding the investment decreases. So 61% of startups have reached their investors through a word of mouth. In 90% of cases from this amount, investors were recommended to pay attention to a certain startup by common acquaintances with startups, and 10% of people recommended a startup to the investor without being familiar with it. So according to mass media records and tracking other marketing channels. Along with that, reach investors through social networks and professional databases, followed by personal contact like Crunchbase and personal letter, LinkedIn and personal letter, and in other ways of social selling. It showed less efficiency and amounted overall to 39% only. So it's all about personal communication. It's all about word of mouth. You should be recommended to the investor by someone. Katya, my question to you, among your big portfolio, how many startups you found yourself and how many startups were recommended to you to follow on their activity by the other people?
Good question. I actually did the calculations. I started about 12 startups in the period of the last 10 years. 3 of them were successful. The rest is failed. So it does fit the market metrics of 80% failures, in a sense, if you do that reverse engineering. How many startups were referred to me? A bunch. I get on average a month, maybe like 20, 30 startups. That's across me personally and the fund, let's say. Yeah, big amount, but also not only art related. Just keep that in mind. Art related, I think, minority of that, and I see that trend picking up.
I know that you're running out of time and you have to run to another meeting, but you'll love the next observation from the report, and then you will make a small comment on that, and then you can, and then I will get back to the report and come closer to our conclusions. So almost half of the ArtTech startups, namely 47%, believe that their business idea was the key factor in successful fundraising. Among the other key factors were hot market offer, 21%, market fit, 16%. It's interesting that no of the respondents mentioned elevator speech or mentors as primary factors that influenced investors' decision. So after obtaining this survey's data, we additionally contacted 32 investors, including you, who had invested in ArtTech startups in the last 10 years. So their responses presented a very different perspective. 75% of investors mentioned validated market fit as the main reason for funding. Yeah, compare 16% and 75%. While the remaining 25% of investors said it was a combination of traction, well-known mentors, and the investment deck, accompanied by an impressive elevator speech. So we should confirm the trend. Unfortunately, after successful obtaining funding, many startups believe that key factor for successful fundraising was the uniqueness of their idea, not the meaningful and effective work of their mentors with startup founders. So in our opinion, the increasing transparency of and information exchange in startup investor relations will lead to higher possibilities of follow-on funding. So everyone should tell the truth. I'm just now I'm addressing to investors. Don't let startups you invested in think that that was their business idea. Just tell them the truth. It will help them to obtain follow-on funding. Katya, what's your reaction?
There is nothing better to add here, Denis. I think my last question: what are your plans with the report? What do you think would be the next steps? And this is a huge asset to the industry, both investors and startups and all industry players. I cannot even think of anyone else who is doing the same. My last question would be like, what would be your vision for to give some perspective for everyone listening, both investors and and founders? Your vision with the report.
Oh, thank you, Katya. Well, first of all, I should admit that we're not alone. We're not alone, and as I mentioned only 2 reports. I would be happy considering them as friendly reports because they have very friendly founders. I mean, the Deloitte Art and Finance report and a series of ArtTech reports, and also Hiscox online report, also conducted by ArtTech. But also we have a lot of reports coming from the museum sphere, from the Museum Next conference conducted by Jim Richardson. And we have ArtNet reports, we have Art Price reports, we have Art Basel and UBS report, which I mean the new edition of which came to the market 2 days ago. So we have nearly, I mean, up to 20 specific reports, not to mention TEFAF report, but we are all occupying several niches. So the niche of fundraising, of investment in ArtTech startups has remained uncovered. So we just took that niche. For what? As I told our dear audience, I can repeat. So the mission of the report is similar to the mission of Fuelarts. It's to make the ArtTech ecosystem more friendly for startups and transparent to investors. We're just merging the 2 worlds, the VC world and the art tech society. So that's why your and other readers of the report comments and suggestions will be always a priority for us. While working on this report, we noticed a couple of ways how our next Fuelarts report can be improved. Even during this presentation, I found several mistakes, not important ones, but it also could be improved. But in 2022, we'll be actively working, first of all, on improving the data collection and analysis system. For that needs, we're going to build several new automated algorithms. Sorry. Yes. So we're moving forward because collecting the data is easy. Then you have to analyze it. From the other hand, if that data won't be collected every week, you will not come up with the report ready even in April or May. So the key data for this particular inaugural report was ready in the first 2 weeks of January, but then we had the design work, then we have to analyze that data, and then the war in Ukraine started, and three persons from our team are currently in Ukraine, including me. So that's why we have the report ready in the end of March. Also, working on the first report, we should have kept in mind that if we're trying to estimate the previous year, let's say 2021, but this is our first report, so we had to show the whole ecosystem at least once in our first report. Then we had to show the numbers the art and tech market had come up with till 2021, and then analyze 2021. So the next reports will be less complicated, but of course we'll try to compensate that in complexity with some interesting data and new approaches. That's it. Your question, I mean, replying to your question would have been the perfect finish of our presentation. Though, if you have 2 more minutes, I will come up with several more conclusions.
Sure, I have 2 minutes and then I'll have to jump off. But maybe you should carry on without me anyways to give the summary.
Cool. So that's why I should disclose some information, because you were one of the strategic advisory team of the report and conducted your part of job. So thank you, Katya, for that.
I'm happy to be part of this, Denis. I think what you're doing is very impressive and has very solid foundation, lots of potential, and that's why I'm here.
Thank you so much. So the next, I mean, the following steps will it will take, let's say, it will take me 5-7 minutes to complete, let's say, the key findings from the report. And but Katya,
then maybe I can, yes,
feel free to jump on your important business meeting.
I'll
because
jump
you are
off
working for the sake of the ArtTech ecosystem, and that's more important than being here with us.
Again, no, it's important. It's important to be here with you guys. I'll jump off because I had some solid questions to ask and challenge you. So I hope I was able to voice not only my questions but everyone listening to this. I'll let you wrap up and take the questions from the audience. I think that would be super useful. And I look forward to, actually, I encourage everyone to read the report. I did it. And I know Denis was saying that I'm not doing it in the right way, but I actually printed it. And I really enjoy reading pen and paper. So I encourage you, if you were, I mean, don't print it, but we're all being very aware and cautious on the recycling.
I believe Greta Thunberg is not listening to you.
I hope not. But anyways, I really enjoyed this read, and I encourage everyone to download the report and read and ask any questions and take action on the insights that you get from the report. So that is my encouragement. And Denis, I'll let you wrap up. No one will do that better, and take the questions from the audience, because I don't think you might need me there. Thank you, guys.
Thank you, Katya, again.
See you soon.
See you. So let's get back to the key findings. And 79% of the report respondents conducted customer discovery while launching a startup. 68% of the startups surveyed did not pivot into NFT in 2021, and only 16% of them do not plan to incorporate digital assets into their business. 11% of the startups surveyed said that they are currently actively exploring opportunities in the NFT market. 94% of startups consider their current business model resistant to possible crisis. So in other words, they are adaptive to rapid transition to remote online work and see opportunities for the expansion of their audience. 89% of young ArtTech startups expect high interest from investors towards this sector in 2022. And 42% of founders plan to launch a new art and tech startup in the next 5 years. So, as I told you, among the 136 participants in the strategies survey, please lock this screen. So we received 30 responses, which is 22%. And what's especially valuable, we received responses from publicly recognized opinion leaders in the art tech industry. Thank you for that. The two key points I'd like to take from their responses is that the problem of generational change is seen by art strategists as the most acute when it comes to global recognition of digital art. At the same time, the creation of an academic infrastructure for academic recognition of digital art seems less important. It seems important to only half of the respondents. Interestingly, that no one of the respondents highlighted academic research, which should be the basis for the acceptance of NFTs in museums, including digital museums. It was quite strange to hear that, but we'll discover the why did people reply so. So in general, according to art strategists, in the next 5 years, the global art market, both traditional and digital, will face with 5 global problems, which is regulation, transparency, generational change, reduction of commissions, and adaptability of business models towards the crisis and pivots. So, and the case study in the part number 4, our dear friend Poesie Liang from Malaysia, which has been previously well known as a traditional artist and performing artist and street artist, and now she went into NFTs and she created the whole. So, I mean, when I heard about this project, I said, Poesie, look, you have a startup. She said, no, I have an NFT series. I said, no, you have a startup around this NFT series as soon as you added gamification in your NFTs. Read, and you can also purchase some running rabbits from Poesie. And also, Poesie will be one of the mentors of our upcoming pre-acceleration courses. which start in late April, online courses from Fuelarts. So let's jump to the conclusions. You all are expecting conclusions. So conclusions show us that the classic and digital markets, we expect them to be less divided in the coming years, and to serve one common goal, to bridge the gap between generations and their aesthetic preferences. Though filling the gap between traditional collectors and digital art, NFT enthusiasts and physical artworks. So this is the essence of that work that both classic and digital markets, digital art startups should stand for. And happy to mention that the inclusion of NFT sales by online physical art mogul seller like Wenk Contemporary serves as a great example of this process of merging the two worlds. So investments in the ArtTech sector had a different character in 2020 and 2021, because as we remember, due to the COVID-19 pandemic, most of the investments in the sector had a rather chaotic character, while 2021 presented a more logical and structured approach with diversification in short-term and long-term investments, as the real market should have. Regarding our survey and the information which we took from Crunchbase and PitchBook, the following should be said. The open source data confirmed our own research, which presented that ArtTech startups successfully proceed at the stages of venture investment. In other words, they're happy from angel investment to Series A, when they have to communicate with venture capital investors. So they're doing well as soon as they receive the angel stage. Because at the early stage, startups experience shows that they have difficulties in finding their market fit before the angel stage. But after the inclusion of institutional investors at the later stages, A, B, C stages, so startups generally have difficulties in communications with the new type of financial partners, which are institutional investors, not the VC investors. And they also experiencing problems with scaling their financial models. Thus, startups at the earliest and the latest stages need maximum support, according to our survey. So, not to mention the NFTs. Of course, we talk a lot about the NFTs, but of course, in 2021, NFT was often perceived as a bubble, and partly that was true, but now we can see that the NFT market is developing, first of all, because of the strong ecosystem infrastructure startups appeared on the market and being funded. So despite on the great volatility of the NFT market lately, we observed the relative stability of the blue chip NFT market and the NFT startup funding, because we see a real massive and ongoing investments in the NFT startups segment with the prevailing long-term approach to investing in those infrastructure startups. And talking about the 2022, we think that in 2022, many investors would see value in digital assets and decentralization in terms of the current situation of geopolitical instability. So I'd like to thank our online listeners, and before that, say thanks to our team responsible for content and research, namely Sonia Stubble-Bine and Daria Rjavtseva. The strategic advisory for several parts of this report was provided by Roxana Zarnegar, Katya Cohen, my co-host for today, and Diego Berio from Amadeo Global. Not to mention the PR support conducted by Thatcher's Art Management and its leader, Anna Shvets, and her team, Ksenia Listikova, Maria Bajenova, and Veronika Smirnova. The most important person was responsible for social media management. That's the one thanks to whom you can track our report online. You can download it from numerous of sources. Olena Yara, aka Lola. And the design, this bright design, was created by our art director, Alexey Kokhanov. At the moment of creating this design, he was in the epicenter of the war in Ukraine, and he's currently here. He was forced to change his studio and the bomb shelter several times a day. That's why the report is bright, because our technical assignment towards Alexei was make it business-like. He said, sorry, it will be bright as we hope the future will be. So we also hope that the future will be bright and colorful and cheerful, and not only with the help of the report, but also not only with the help of the report and within the art tech ecosystem, but in the rest of the world. I understand that we're being late because I was too slow and too careful with the information we've been looking at throughout the 3 last months. But if someone has some questions, let me see, and I'll have the time to reply. How can a startup obtain its first investment? So a part of this question could be found in the report, in the section named the lifetime of a startup. A part of this question could be found in our articles on the website fuelarts.com, and our also you should search for Fuelarts at Medium online platform. We also recently have started posting our market observations there. But how to find your first money? You should have the idea which solves the problem, and you have to test that idea to make customer discovery. So first you find the idea, then you find the problem, or vice versa. You find the problem and then you elaborate the idea which solves that problem. So the ideas should not shouldn't prevail on the problems. The startup market should be problem oriented, not solution oriented. Only in that case, your solution, which is the reaction to some market problem, will become successful in the eyes of the investor. But in terms of financing, the investor would require customer discovery. So stay tuned, and you'll know more about how to provide customer discoveries from our articles. Impressive. Thank you. Excellent. Yes, we've found 4 mistakes there already, so it's a bit less. Are you married, Denis? Not yet, but I'm happy. So we can continue investment relations with you, Rosalia. So profound. Yeah, yeah. I will not read your thanks, but for not wasting the time. But I'm grateful, and our team is grateful to you. It looks quite well done, even without the improvements. Thank you, Massimo. Thank you, Massimo. We'll improve something, some points, and we'll slightly replace the report, I believe, tomorrow morning on the website. Until what time the founders should invest their own money? I believe that's from the person who was asking about the first investment. Until what time? Yeah, that's a big problem for the startups, because some of them consider that the more than they invest themselves during the bootstrap period, the more money they could receive from the investor for less equity percentage. That's not true. There is a certain benchmark before which you should even should, not can, but should invest your own money, or using the 3F rule, fools, family, friends, in which order it's up to you. But after a certain period, it's not wise to continue investing your own money. Don't be greedy. Just share your project with the world, because your competitors will do that before you. They will show their product, and those investors waiting for your genius realization of your double genius idea will give the money to those who will show at least something, but ready to be invested in. But what exact? If to be exact, this period is, let's say, elaborating the idea, testing it on the market, sometimes, and creating the investment deck with at least several. After talking to at least several mentors, after that you can. Sorry. After that, you can expect from the attention of investors, but angel investors. But if you are pretending to receive pre-seed or pre-seed money, you should also create a prototype. You should also create a prototype and test it on the market again. This is the short answer. The more comprehensive reply you can find on our website, and also during our online courses. What do you predict about female founders sector? As I told during the discussion, I predict that the quantity of the female founders will increase. Also, we can see that the quantity of female founders of non-digital and non-NFT startups is lower than the female founders of the, let's say, classic art tech, dealing with physical art objects, which is natural, because the founders of galleries, female founders of galleries, their number is bigger than the male founders of galleries. But I predict that starting with excellent examples of, for instance, VArt platform created by 2 Ukrainian female founders, an NFT platform. So they received good investment in 2021, a year after launch. So their example should bring more female founders, not only in general art tech, but in digital and NFT art tech in particular. And the investors, after the data released in our report, should pay more attention and should trust female founders, startups founded by females more. Do you have NFT? How many? I have NFTs. Some of those NFTs are for personal usage because I consider it as investment, my personal investment in the career development of those artists whom I support as personalities. And the second portfolio is the portfolio which we are managing. So I have both personal portfolio and let's say personal portfolio, work portfolio, and we also have technical portfolio. This is a kindergarten portfolio where we just looking at several emerging artists and trying to understand how the market reacts to this or that trading signal. How many in value or in volume? A bit, let's say. Okay, so I see that the questions are over, and thank you for being with us. Please download the report and don't hesitate sending us your feedback with your wishes regarding its possible improvement. And again, just subscribe to our newsletters to know the information about the ecosystem of ArtTech and NFT first. And thank you for being with us, and stay tuned with Fuelarts.